I wonder if there's a max limit. Yikes. Oh well. Anyway, win some, lose some. Alright, so this is the weekly on Honeywell International. This is the second largest holding in the industrials. Lines that I don't have drawn yet. Alright, so we have the secondary retracement drawn from the January low or December low up here into the July high. We see those levels in blue right now after this washout that occurred back in August when price broke below the support point, tested lower. Right now we have price still continuing to hold that 23.6 at 165.5. Again, a lot of support down in this general area as well, so I mean I wouldn't be trying to short this breakdown. If the stock has enough strength to it, there we go, that's a little bit better picture. Oh, and it's confirmed. There. Alright, so we're watching this build out. We see the supply, inching down. A lot of volume up here above price. This is going to be a pretty big place for the stock to hold, this 164, 165 area. If it can hold here and push back up into this downtrend, I mean, I wouldn't play this long. At least not from this price point. Just too much to work with overhead. There. So you've still got to break over the 61.8 at 169.5. A lot of volume in here at 171. So certainly not something I would play. I think that I'd probably watch Honeywell for more of a potential breakdown candidate. I would watch it for more of a breakdown component. Yes. TradingView just does not like me today. Anyway, below 164, possible move lower here in Honeywell. Not a lot of volume below price, a lot of potential gaps to fill, and then we still don't have a retest of the secondary 38.2 down here at 157.5. So if there's a stock to play to the downside out of the index or the sector, certainly look at Honeywell. However, being bullish the index or being bullish the ETF and then playing bearish the stock doesn't really jive with how I like to trade. I want everything to line up. I don't want any counter trends in longer term plays. But I mean, if it's your thing, then there it is for you. Let's see, last one in the XLI, secondary drawn here on UNP. Again, lost the 23.6 again. Just again, one of those stocks that just can't hold its size right now. Another one where I would potentially like to see more volume develop down here between 160 and 168. Really get this volume node expanded, kind of out to what this one is down here at 132. What you really want to see in things like this is for the perceived value to move up. That's basically what the point of control is showing you, the fairest price to do business. So really just no trade for me here on UNP right now. It does show demand every time it breaks down below 160 and it's higher demand progressively, but really not something I'd really want to get long right now. I think if we get some support over this 168, 170 range, you see my alert up here at 172 or 171.50. If it can get some support up here, could certainly make it push up and out. But for now, I really just want to see a little bit more build out of volume there. We can do something like this. So on a shorter term scale, we added that yellow retracement. We see the expanse of that retracement, and then price goes all the way up here into the 61.8, 171.40, small trap, and then progressively back down. So we've already tested that price point. This gap has been closed already. So really just, for now at least, not really a good reason to get long UNP until it can hold this 168 to 170 range. Really over 171 can open it back into all-time highs. But rather see consolidation in that one right now. XLI, the largest sector in the market, for good reason. If it ever loads, there we go. XLK doing a good job right now of trying to hold above this tertiary 23.6, 79.80. Closed right at it. Also, I really just have it on the weekly to show this uptrend from the December lows. It is a confirmed uptrend, and price is getting relatively close to it. We see it crossing that 79.80 price around the end of this month. If we want to go into more of a daily chart, we can see it got, oh, come on, TradingView. It got relatively close today, down here into this touch. 3, 4, 5, 6. So six times it's tested a support, and 6 times it's held and created rather decent bounces. So we'll see if number 7 holds it again. I think it's also important to note here on the XLK this large amount of volume below price, just like in the the NQ, all that build up that we saw a few weeks ago, a month ago. This ascending triangle here. This is really just a back test of all that action, and so the question is, does this back test hold? That's what we're waiting to see, really. If we put a shorter term retracement level on this, we can see a couple more levels of interest. The 61.8 is right here. It's kind of covered up by the other one, but right here about 79.80 or so of this shorter term track from the 24th of July down here into the 5th of August. So again, large area of necessary support, I think, for the XLK. You know, it can come down and it can pierce through this uptrend, I think, and still be okay, so long as it can recover it on a daily basis. We see no trends, several touches, even one cross through, but no daily closes underneath this uptrend. So that's going to be, I think, pretty important for this sector. If it does break down under this, I think we get a lot more consolidation, honestly, between 78 and 79. Not going to really be good for a directional market at all. But looking for price to recover this 80 area. Oh, it's not going to let me. Dear TradingView, let me have more alerts. Anyway, so looking for a breakback over 80 here in the XLK to push it higher. Again, a lot of volume below price. Yearly point of control housed in there as well. Uptrend. A lot of good things for this ETF. Break over 80 to test back into that 81 area. You could do an even shorter term retracement if you really wanted for intraday levels, something like this. But after a while, there's lines at every price point. So for now, just leave it like this, and look for that breakback over 80, and then otherwise watch for that consolidation to occur if we lose this uptrend. Largest holdings in the XLK, we'll start with, is Microsoft still the holding? I think so. Anyway, Microsoft and Apple always close. Here's Microsoft. Let me get rid of this green one. Guess we don't really need these anymore. I'm going to leave that one though. Alright, so Microsoft is at its all-time high, basically. You can see from the weekly chart, consolidating up or near the all-time high. I actually tested into it last week, and now still consolidating. Nice high and tight right here underneath the all-time high. Building out a very nice area of volume on even the weekly chart. So that'll be something to watch. Let's go into the daily though. There we go. So here's the daily on Microsoft. We see that we had that push into new all-time highs back here on the 19th of September. After we get that push up, obviously this major pull down for this, that, or the other reasons, but still trading right at its yearly point of control. Yeah, yearly point of control. Up here at 137.38 or so. So certainly going to be a major area to watch. Also, for a shorter term, you cracked your screen halfway through. You like a recording too. Well, we'll see what happened to Movavi, because it stopped, but now I'm recording again, so we'll see. Anyway, so if we want here on a shorter term time frame from that low back here in August up here into the all-time high, we can go ahead and let's do a green, and we see the price action. Generally, right now, price testing down here into about the 50 with that point of control, 136.57. With this, it's confirmed uptrend. Underneath price, trading right now at about 135.8 or so. Really like this setup with the ascending trend line underneath it, volume below it. Would like to see price push back up and outside of this 38.2, preferably on a daily or on a weekly candle basis, which gives it Wednesday, Thursday, Friday to complete that rise higher. Just kind of show demand in that weekly candle. If price can push up above that 138, would look for it to move into 139.6, this all-time high at 142.37, and then your first extension is up here at 148. Again, you've got earnings in all these major names coming up at the end of October, so about a month left to see what they'll really do before earnings dates. But certainly a stock I like to the long side. Microsoft, top holding in the XLK. Second largest holding in the XLK is Apple. Let's go ahead and I'll leave that one on. This is probably a mess on the weekly. It's not too bad. Alright, so this is Apple on the weekly. The pinks are all-time high or all-time low to all-time high. We see that test down in December, down to 38.2 at 145. Since then, higher lows, higher highs into price. We get here into this consolidation of Apple, and we can see just a lot of supply coming down here in the last 3 weeks. Really telling just by those topping tails into all three of them, Gravestone Doji, and now another Doji possibly forming here against that previous swing high is what that pink line is, or purple line, or whatever that is. But a lot of volume building up out here in Apple, so really hard to be too bearish the name if it can still hold this general area. Let's see what it is on the daily. Oh yeah, there it is. So it's about 117.5 on the daily. Hi, dog says hi. See if it can hold this volume and keep building back out to retest this previous high. In the shorter term, we can strike a fib from that swing low here, and we can see for the last couple days it's been breaking through this 23.6. Continuing to see sell side pressure, but the 217.5 area continuing to hold. 217.02, my mistake. 217.02 continuing to hold as support. If we do lose 217.02, can see a flush all the way down here into the current uptrend and the secondary 76.4 and that smaller term 38.2 at this 112 to 113.5 area. Again, if price does move down here, we'll look for more consolidation in this range first before it tries to break up and out. The volume profile on Apple is pretty blah. I don't know if there's a better word. Again, a lot of distribution areas, and then you get nulls, and then volume, and then nulls. And so, like I said before, what this creates is when price enters those nulls, you get that fast-moving price action. People call it capitulation or whatever you want to, but what it is the lack of order flow through that area. And then, it increases sellers' which increases emotion, which increases more sellers until it falls into another pocket of volume, which is demand. So this area of demand generally would be, this 212 to 213.5. Again, though, if we can see Apple recover this 218, no reason it can't retest that previous all-time high at 211 and then back up here into 226. Again, just not really one of the techie names that I'm really trying to play right now. Really just want this to kind of reset and build out a volume shelf first. Oddly enough, Visa is the third holding in the XLK, which I still don't understand, but so be it. Anyway, let me delete the short-term one, go out to a weekly. There we go. Visa, huge move, just like everything else off that December low, pushed from the 120s all the way up into 187. We see it's currently trading over the 23.6, but there's a little bit of volume built up out here. I posted a tweet about it a couple weeks ago. Generally just concerned that it's not going to be able to overcome that volume, and then it's going to explore lower. Again, you can see, we can probably see it on the daily. There we go. Yeah, so you can kind of see it on the daily here a little bit better. You see this huge build out at 180. Lot of time spent there. We gap down and we lose that, and now just downtrending since. Kind of a flag, if that's what you want to call, something like this. Just flagging lower into that 23.6 at 171.6. Always the option for price to move up, test the 180, and then back up and out. Again, earnings again on the 25th for this stock, but just a lack of volume below it. It's tried to test lower, and this 168 has held it multiple times. Just wondering if we don't see another test into that 168, and then again, a few expansion bars, quite a few gaps through this general area from 162 to 171. So if we do lose that 170, 171 support, I would look for Visa to make a move a little bit lower here into the 162 range. Quite a bit of volume down here, so I would expect this general area to hold around 172. We could do something like this in the short term. Oh, there you go. So that's a little bit nicer for if you're on the long side of this. There you go. So if you're on the long side of this, really think that you want to see that 174.6 hold. If not, it allows that test back down into that 170, and then double bottom 167, and then down into 162. So again, just not a name I'd try to be long right now with all that volume above it. Go into the XL. What's next? V. Been a long day looking at charts. Yeah, the XLV. Now I'm skipping utilities again, just like the energies. Doesn't really hold a large swath of weight within the market. So XLV, another one that's done a lot of consolidation here in the recent past. Nice volume profile on the weekly building out here. A lot of volume between the 90 to 92 half area, basically. You see that point of control at 91.5. And price just kind of trading around it at this point. Get rid of, we'll get rid of it for now. So you kind of just see price trading around that level right now. So long as it holds above that 90 level, 90.16. I like this to the long side, though I'd really like to see that break out of consolidation first. I think probably a lot of theta decay still in this range, unless we get some news out of the healthcare sector, which seems that any news out of this sector lately has not favored the bulls in the least bit. Uptrend here as well, uptrend underneath it as well, secondary uptrend. So something to watch here against 90. Move up and out over this 92.4 area. 92.4, 92.5 area. Can see expansion back into that 94.4 and then up into 96. This really has a potential, just like the XLF and XLI, to really be a large mover into the future if that's the directional bias of this market, which so far there's no reason to assume it's not. Short of short-term news flow, general trend is still higher. For this, that, or the other reason, other people think it may not be, but until proven otherwise, that's what it is. So gives us some targets here on the XLV healthcare. After all-time high, 98 quarter-ish, and then up here into the 104, 105 area. So certainly something to watch here. Another sector. If you have the XLF, the XLI, and the XLV, three of the largest top holding, three of the 6 largest weighted sectors in the market. So at the very least, you're at a push, and then you have to look at all those other sectors. But consider those 3 about 40% of weight, 38 to 40% of the weight of the market. So certainly a bias for the long side if those do decide to start breaking out. We can look into the XLV here. We'll start at the top holding, Johnson & Johnson, the only one that's weighted over 10% in this stock right now, or in this ETF. All right, so Johnson & Johnson, again, pink is lifetime retracement levels. We can put a secondary retracement level on this, something like from here to here. Generally, I like to apply retracement levels after a retracement level of the previous magnitude has been tested and held to support. So if that makes sense, so like all-time high was set, and now this retracement is down here at the 23.6. So I'd like to know the general range of retracement through this zone. It doesn't mean that this is the end-all be-all. It just means that after this dip and retest, this is kind of the area I want to watch. Again, everybody does different things with retracement levels. I've seen a lot of people do some awesome things with them that I would have never thought of, and they do well with it. So again, just one of those things. Different strokes for different folks, I guess, is the saying. So that's what I'll use in this general regard. Anyway, back to a different chart of Johnson & Johnson here. Retracement was just a little off. Still a unconfirmed uptrend here, kind of confirmed but not quite. Anyway, still so anyway, slight uptrend. You have this point of control building at around 132 or so. Unconfirmed downtrend as well, smaller wedge. Price holding that secondary 61.8. Actually, once the all-time high is set, you see the spike lower. There we go. We see the spike lower here on the 24th of December. It actually pierces the secondary 61.8 and recovers. And then multiple tests afterwards down there into that level and confirmed to support. We see a test again down into this general range 124 and 129 here into August, and again holding a support in that area as well. So while price is above this 124 to 130, 129 area, I certainly wouldn't try to be short this name. Again, one of those consolidation type events where sometimes you just can't play. To bias higher, need to see that break over 134 or so. We could do a shorter term retracement, do it in yellow, to give some alternative targets here. The shorter term 38.2 at 131.69, creating some issuance. Again, resistance up here into this 133 to 139 or 35 area as target 1, and then up through this smaller null into the 138 to 140 area as target 2. we may just see this wedge continue to develop. Again, like I said on some previous charts, we have a volume node up here and a volume node up here. Would kind of be nice just to watch price do one of these, really build this out into one general large node, so it could act as a major support for any back tests. Again, if this is a wedge or a triangle, and we do get that break up and out over that 138 to 140 area where that second node is, then we can test up here into all-time high 149, and then that target's up here at 166 for that breakout target. Certainly something that I'll be watching here, even though I had to delete my alert. I wonder how many times I'm going to do that. Just write it down. J&J. Alright. So that's J&J. UNH, second holding. UNH on a weekly here. That's, if you're wondering, this giant parabolic curve. And now a breakdown. It's been a while since I mentioned this one, but still slowly trending down off that parabolic curve. Currently testing that primary 23.6 at 220. Has tested previously down into 208 and held on the monthly candle. And then a secondary test there into 220 last month, or into August, and a hold there. Now seeing a breakdown again. So certainly not something you want to see out of one of the top holdings in a sector that you want to see move progressively higher. Although UNH is only one stock out of some, holding that has like 60, and it only holds 6%. So things can break down within sectors. Not everything in sectors rotate together. It's not the end all be all, but it's certainly something to think about and consider. More zoomed in here on the weekly on UNH, 220 here as support. If we do break down 220, offers a retest into the double bottom at 208. I'm going to move lower through this lack of volume down here into the 193, 194 area. If not all the way down into 178. Really hard to create a short off of this until this 220 level breaks, though. Always erring on the side of caution of the primary retracement level there at 220. I always consider the primary over the secondary at any point, especially if it's just the secondary 23.6. So we'll see what this stock does. Again, I'm sure it's probably got earnings on the 15th of October, so in 19, 20 days, this is reporting. So again, one of those things where we'll have to watch it into earnings and try to play reactionary to it. Not a big fan of trying to play earnings, as most of you know, because I'm god-awful terrible at guessing and gambling on basically anything. Anyway, so that is the UNH. Oh, this is what I was trying to fix. Anyway, so UNH, bias long against 220, but not really a playable stock for me at this particular point. We'll just have to see what happens. And Merck is the third one in this sector, and the last one I'll do out of it, because I'm sure most people don't trade Merck, but we'll see. Weekly chart, we have the tertiary here from the 2nd of April all the way up here. This Merck chart is kind of interesting too, so I just wanted to take a second. You can see on the monthly range here on Merck, if we delete this one, you can see on Merck here, we push above the secondary 76.4 at 78.6, and currently price has continued to hold that level on multiple monthly tests. We continue to see demand off of the 78-79 range, pushing up into the 83 to 88 range each time. So certainly from a longer term standpoint, as long as that 78.6 holds, I really like Merck to the long side. The question is, do we see a major consolidation up here first? And that would be a great thing to know. But for now, what we can look at here, at least on this term chart, that even on a shorter term, even measuring that move from the low of the April 2018 up here into the highs, it's still holding that 23.6 of that move as well at 79.07. So holding in the upper distribution of a retracement level on multiple time frames is a pretty bullish statement to me. Certainly one that I would continue to watch for a breakout. You can see my alert on Merck set up here just above the all-time high cross. Where is it at, the all-time high cross? Just above the all-time high, or just below it. Edit. I like to set it a little above it, just in case there's a stop run. But anyway, neither here nor there. And then, I guess in addition, we could, in a shorter term, if you're trying to play this, you could do something like this as well in the green, just a longer or a shorter term retracement level. Just a shorter term retracement level, really, here on Merck, just to show that consolidation and price points here in the stock. So 61.8 down here in next to the cumulative or composite point of control here on the daily chart, stretching back really all the way into 2015. So a lot of demand down here. 80, 70 up here into about the 82 level. Certainly probably a nice place to, if you're playing shares out of Merck, probably a pretty solid place to get long. Pretty tight stop there. If you lose that 80, 70, your stop's only down here into 79, so not too much risk to that. And a nice volume build out there to help. In the shorter term, want to see Merck hold this 83 area or so to move up and out. Once it just moves so slow. Oh, okay, well that's going to be very similar. That's what I figured. So I don't know if you saw that. I guess I should have left it. So we can measure this last move. I'm just going to do the 61.8 on it so it's not so clustery. You can see if you remeasure that move, since it's still contained technically, that 61.8 here on that move is up here at the 84.20 or so area. So an area we definitely want to see price get back over before we consider entering to a long side trade. But overall, through time, as a just a 401k holding or whatever, really like, what is this for? Really like Merck here over 87 to test up into the 92, 93 level, and then possibly even up here into that all-time high of the stock up at 96. Oops, be moving. Oh, come on. Even up here into the all-time high at 96.70. Certainly against that 80 price point. I really like that as that target. The final large sector is the XLY. Oops. Anybody chatting? I haven't even been looking. Oh, no. Cool. The other sector, again, is the XLY. Top holding Amazon with like 20%, 22%, I believe. And then I think Home Depot at like 10%. So anyway, retracement from the 08 lows up here into the all-time highs. We see that support there at the 23.6. Let me just clear some of this shit out. Sorry, stuff. And so we have this right now. We can do a retracement here from this spike low back in December up here into the all-time high. And put some colors to it. And here we go. So monthly chart here for now. Certainly some selling pressure up here against the all-time highs as we would expect, but still demand also below 117. So interesting area of consolidation. Go into a shorter term time frame. I don't know why that's there either. Shorter term time frame. And this is what we see. Price has been bouncing between that secondary 23.6 at 117 and back up here into the all-time high at 124.6. kind of odd if you consider that XLY's top holding is Amazon, and Amazon looks kind of like this, you know, testing lower. So certainly something to consider, that all the holdings that outweigh Amazon at 25% are still really keeping the XLY afloat. So certainly something to continue to watch here. If Amazon can finally get a bid, we'll go into that chart in a second. But if Amazon can get a bid and this is still sitting above 117, this is another one of those sectors that I'd probably be keying to the long side again. In the shorter term, we can go into a daily chart. And we will put one just on the shorter range here. And yellow. And we can see that the point of control in this area is 119.26, just above that 50 at 119.01. So seeing it act as support, certainly bullish. Like most of the larger caps, or most of the larger holdings, again, we have a volume build out up here in the 122 to 123, and then a big one down here in 119 to 120. So may see that push higher, and then, you know, consolidation to build this out a little bit, just kind of make it a larger node. Again, nothing that is necessary, but it's just really nice to see those larger build outs when you're approaching them for support. And what I mean by that, I hope is referenced when we looked at ES. One second. Hope it's referenced when we looked at the ES chart about why we want to have volume below us. Again, if you missed that part, you want to see volume below you because it's acting as demand. So like I said, 29.15 to 29.32 on the ES chart. But anyway, all right. So anyway, so that is the XLY. Really hard to get short this name unless you're playing in between these levels until it breaks down below this 116 to 117 area. Secondary 23.6 that's been tested numerous times and held to support. There is a small gap to fill here down around... down around the 118.6 level. Just really small though, so we'll see. You might see a spike low to fill that, but it wouldn't be a bet that I would take. But above that 120 level, certainly looks good to the upside. In that name, you've got a pretty aggressive downtrend here as well. We can look at that on the daily real quick, or the intraday. Yeah. So pretty aggressive downtrend there, but again, you see that just that expansive volume here, even on the shorter term chart, acting as, or starting to act as support. Nice build out. So again, XLK or XLY up and over that 120, and then over that downtrend would be nice. Like I said, top holding is Amazon. Top holding Amazon here. Gonna need more than a 4-hour chart for Amazon. Let me just get rid of some of these shorter term time frames. I put that in there to kind of show the range of support, this colored wedge. Let me see if I can't just take it out though real quick. Okay. So this is Amazon. Like I was saying before, kind of odd to see that top holding in the XLY falling while the the sector remains relatively calm. But a lot of news flow, this, that, and the other. So we see Amazon currently testing down into these uptrends that previously held price off of that retest of the this primary 23.6. There you go, at 1567 or so. Really just a big cluster of retracements down here, 1567 into 1592, that have been supportive every time it's been tested. Then you have this move higher, which has also been tested into 1680. So watching to see what this uptrend does. I don't like to buy uptrends underneath horizontal retracements, because I trust the horizontal over the trend lines, because technically it's just a line. But I guess horizontals are too. But anyway, so not really a. I guess if it's a common share, it's pretty easy to buy this 1730 or so area. For me, playing an option or options, I'd like to see it over the 1770 and move higher. But it's the weakest top holding of either market, I think, that I've found. I think in the SPY it holds about 3%. I'm not sure what it holds in the. It's like 17% or some nonsense in the NASDAQ. Let me see. Oh, it's only 9.3%, but still third top holding or fourth top holding if you add the Googles together. So certainly the weakest, I think, or most vulnerable in terms of charts for these longer term holdings or for these bigger weighted holdings. Not a big fan of betting against them. But if we do lose this uptrend, can see a retest down here into the 1860 to 1700 range. Large build out of volume here at about 1700, and then that cluster of fibs from 1670 to 1680. So we'll see there. Again, not a big fan of betting against the big names. Just kind of let them do what they want to do. But everybody's got a different cup of tea. Sometimes TradingView doesn't like to save charts, and I do not know why. So, sorry about this. Just put a quick retracement here on HD, the all-time, then we can do a secondary from that spike down in December into the high. We'll call it blue, and then we could put an extension on that range. Okay. Looks like we should be good. So monthly on Home Depot, again, very, very, very large extension off that December low, like most things, 156 all the way up into 235. We can go down into probably just a daily. Maybe not. All right, let's do weekly. You can tell, not a name that I trade too terribly often. Day. All right, and we'll do this. All right, yeah, and this maybe. Yeah. Okay, so here's HD on a weekly chart. Again, not a lot of volume established up here on HD. And also that back test still open down here at the secondary 23.6 at 217. 217 to about 219.30 or so for a valid back test. If we could see that, I think it certainly offers a option to buy. Let's see what it looks like on the daily. Yeah. Sometimes a daily chart looks a lot different than a weekly chart. Obviously. That was a stupid statement. Pardon me. All right, so Home Depot here, we can see, again, not a lot of volume here between 221 and 226 at all. I would question if we don't see that 221 area retested as support. If not, down here into 217. A lot of topping tails here on the HD daily chart. Though, to be fair, it didn't make today's low wasn't below yesterday's. So that's something to be said, given the condition of the market today. So for now, again, not really a stock that I'm trying to play here. I don't do HD long or short for that matter. But I think that if I was playing it, I'd want to see it back up over 227. Otherwise, it risks filling in this kind of void of space all the way down into 221. Um, yeah, there. Also, the shorter term uptrend here to try to play against. Again, I think the primary direction of the market is still higher. Until we lose some of those points I've talked about earlier. So not really something I'm looking to play. I'd rather see HD break back up over 227 and play to the top side than anything. So I think that is the last XLY I'm going to do. Anybody have a stock or stocks that they watch or want to see? All right. Well, that was anticlimactic. Let me do McDonald's real quick. So again, McDonald's, another one of those that's showing relative weakness. It was in the XLP. We didn't go over the XLP, but we see the kind of a topping pattern here in the XLP, pushed up higher, and then we see that downtrend from the highs in the XLP. As far as McDonald's goes, again, trending higher off the lows, but still kind of in this consolidative mess. While price remains under 213, I think it has risk to the downside. Otherwise can push up to fill this gap. Disney, somebody said Disney, so let me back out here into the weekly. Get rid of some of these lines that don't matter anymore. Okay, so the low here on Disney is set on the 1st of February up here into the high on the 22nd of July. We see that currently so we can see currently price continues to push below that secondary 23.6 at 132.78 or so, but continues to see demand against 130 basically. The issue here is going to be like some of the ones we've discussed earlier, like Visa, is if price loses this area of volume, is it going to be able to recover it? And that's going to be an issue because of the lack of volume below it. The volume profile or the build out of volume here right now, so long as it continues to hold that 130.5 area, everything's fine. It can continue to stay in this node and trade volume. The real issue is going to be if you slip below 130, it opens down into 124, and if not, just to close all the way down into 116. So a lot of volume issues here. There's that downtrend as well from the all-time high that we want to see a break over. And then this would be one of the shorter term time frames, or at least the levels I would watch on the shorter term time frame on Disney. You see the 23.6 and point of control acting as resistance, 134 to 134.8, and then you can break up here and to test the downtrend, and then from there your other levels to respect. Also that 61.8 up at 141, probably going to be an issue with that large expanse of volume up there as well. So so long as it retains, long term retains over 132, 133 area, I think it's fine. But again, not something I trade options on, unless it had time. Nerd says, I'm in a small spread position, Jan 140, 150 for 2.4 in case it ramps into launch. Certainly possible. You guys know that I try not to take too much news into account, especially when, it's a product launch or something like that. But yeah, no, certainly possible. And again, this one isn't too bad. This doesn't have earnings out until 12 November or 10 November. So certainly some time till that. Not sure what the launch date is, but we could certainly see, this downtrend broken higher, and this volume acting as support as well. Yeah, no, definitely 130, 132. I mean, I wouldn't short against it by any means. I wouldn't even consider a short unless I started to see this 130.50 to 138 level start breaching, and open into, you know, these extension candles higher in these gaps. But yeah, certainly just if you're in common shares or a spread against that level, I think it's a good trade. Just would really like to see price, you know, back up and over this 134, 135 area to kind of sigh of relief. Hey XD, what's up, man? Lulu, hey, that's what I was on. Nifty. Lulu, the stock that just won't stop moving. Let's see. All right, Lulu. That was the monthly primary, and then the secondary from that December low up there into the highs. It's one of those things where there's no way to really draw it. I wish I could. It just never bends it that way. Not really what I wanted. But the more you mess with it, the more it screws up. I hope you kind of see what I'm trying to get at, though. A lot of not everything trades in straight lines. Something like that. Anyway, you know, you can see where each point taps. You know, not all trends are directional, like most people want them to be. So anyway, there's still an uptrend present on Lulu. Price has continued to support at this 180 to 182 level on each weekly retest before it made that all-time high. So certainly an area that I would continue to watch in this name. If we want to look at a shorter term, it looks like this gap basically filled. It looks like a couple pennies that it missed it by. But let's go ahead and put a shorter term retracement on here. Tag JM in chart section. Oh. So anyway, shorter term Lulu here. So far, after holding the gap fill, still holding this general 38.2 area, 132.2. Resistance coming from the 23.6 at 196.89. Not too much volume above on Lulu on the daily. Looks like this downtrend is currently acting as resistance. And there's the uptrend. Really need to see Lulu back over that 197 to really consider a long. Volume is building out here underneath that price, 192 to 196. But would like to see that break up and over. You can see, you know, all the contention that has been placed at this price point. The last 3 candles have been rejected right at this level, 197. So I think the break up over 197 favors that long back into the 204 range. You could do just like a short-term 61.8 as a target, and it paints it up at 198.6. So certainly an area to target, but again, it's consolidating. It's been on this huge run. I'd like to see a little bit more time built into it. They just had earnings in September, so quite a bit of time left in this one, I believe. What was that, December? Yeah, 16 or 8 December. But again, you have a weekly chart that shows a lot of supply up there in that general area of 197 to 198. Not really a big fan of trying to get long into that kind of action. So, pie. That's one. That's a new one. Well, not new, but yeah. So already we kind of see where the rejection price here on the stock is at that 61.8 of that full range. failing to cross over 40 into that 41 area and continuing to sell off from that price point. Let's add some levels here. There we go. Sorry, been a long day. We have that point of control on the stock at 28.40, that 38.2 at 29.4 or so, it looks like. I don't know why that's such a bad color. So if Pi is able to maintain this price point, I would expect to see it bounce. The question is, to what extreme will it bounce? For now, target 1 is this 50 at 35.40 or so, and then up into 41.40. I don't know much about this name. Judging by the name of it in itself, I'm assuming that it's probably Chinese-based, which is going to have an issue with tariffs and such. But not to bring news into it, but it is what it is. So yeah, you gotta see this 28 to 29 level hold. I think if this level doesn't hold, then you have potential reversion all the way down here into sub 20s. So that's kind of what I'd be looking for under this name in Pi.